Welcome to this deep dive. Today, we're really zeroing in on something crucial for, well, many of you listening. Income tax in India, if you're a non-resident Indian and NRI.
That's right. It can seem complex, especially now with the choice between the old and the new tax regimes.
And the new one's the default now, isn't it?
It is, yeah. So understanding that choice is key. Plus, you've got different rules for different income types, special rates for things like capital gains, but then slab rates for other income.
So our mission today really is to clarify all that. The rates, the basic exemption limits, and then things like surcharge and cess. And who gets the rebate. Basically, get you up to speed.
Exactly. We want to lay out the numbers clearly, comparing the current financial year, 2025-26, with the previous one, too.
Okay, perfect. Let's start with the new tax regime then. For the financial year 2025-26, what are the headline figures?
Right. So the basic exemption limit, the amount you don't pay tax on, is now 4 lakh rupees under the new regime.
4 lakh. Okay. And after that?
It steps up. So for income between 4 lakh and 1 rupee up to 8 lakh, the tax rate is 5%.
5%. And then
From 8 lakh 1 rupee to 12 lakh, it's 10%. Then 12 lakh 1 rupee up to 16 lakh, that's 15%.
okay, keeps climbing.
Yep. 16 lakh 1 rupee to 20 lakh is 20%. Then 20 lakh 1 rupee to 24 lakh, that bracket is 25%.
And the top rate.
Anything above 24 lakh rupees is taxed at 30%.
Got it. That maps out the new regime for FY 25-26 pretty clearly. How does this compare to the old tax regime for the same year? What are the main differences an NRI would see?
Well, the first big difference is the basic exemption limit. Under the old regime, it's lower just 2.5 lakh rupees.
Oh, okay. So tax kicks in earlier.
Right. And the slabs are different, too. From 2.5 lakh 1 rupee up to 5 lakh, it's 5%, same initial rate, but a smaller bracket.
And after 5 lakh?
It jumps quite a bit. Income from 5 lakh 1 rupee up to 10 lakh rupees is taxed at 20%.
20%. Okay.
And then anything above 10 lakh rupees goes straight to 30%. Fewer steps than the new regime.
So a lower starting point, but then steeper jumps in the rates. And this old regime, this is the one where you can claim deductions.
Exactly. That's the fundamental trade-off. The old regime lets you use deductions under sections like ADC, ADD, exemptions for HRA, LTA, interest on housing loans for self-occupied property, things like that. The new regime doesn't allow most of those.
So if an NRI doesn't have many of those deductions, maybe the new regime looks better.
Potentially, yes. If your investments or qualifying expenses are low, the lower rates in the initial brackets of the new regime might work out better. You really have to, run the numbers for your specific situation.
Makes sense. You need to calculate it both ways. Now, looking back a year to financial year 2024-25, how did the new regime look then? Has it changed much?
It has, yeah. The basic exemption limit for FY 24-25 under the new regime was 3 lakh rupees.
Okay, so it's gone up by 1 lakh.
Right, from 3 lakh to 4 lakh now. And the slabs are different, too. Back then, it was nil up to 3 lakh, then 5% on 3 lakh 1 rupee to 7 lakh.
7 lakh, okay.
Then 10% from 7 lakh 1 rupee to 10 lakh, 15% from 10 lakh 1 rupee to 12 lakh, 20% from 12 lakh 1 rupee to 15 lakh, and then anything above 15 lakh was 30%.
So quite a different structure compared to the current year's new regime.
Yes, the brackets have been stretched out a bit more now, along with that higher initial exemption.
Interesting. And what about the old regime? Did that change between FY 24-25 and FY 25-26?
No, actually. The old regime structure has stayed the same. That 2.5 lakh basic exemption limit, the 5% up to 5 lakh, 20% up to 10 lakh, and 30% above 10 lakh, that was consistent for both years.
Okay, so the stability is in the old regime, the changes are in the new one. Good to know. Now, beyond the basic tax rates, there's surcharge and cess. How do those work for NRIs?
Right. So surcharge is basically an extra tax on your income tax amount, but only if your total taxable income in India goes over certain levels.
What are those levels?
For both financial years we're discussing, 24-25 and 25-26, there's no surcharge if your income is up to 50 lakh rupees.
Okay, nothing up to 50 lakh.
Correct. But if your income is between 50 lakh 1 rupee and 1 crore rupees, there's a 10% surcharge on the calculated income tax.
10%. And it goes up from there.
It does. From 1 crore 1 rupee up to 2 crore, the surcharge is 15%. Then between 2 crore 1 rupee and 5 crore, it's 25%.
And above 5 crore?
It hits 37%. That's the highest rate.
37%. That's a significant addition.
It is, although there are a couple of important points here. First, for capital gains tax on specific listed equity shares and equity mutual funds, the surcharge is capped at 15%, even if your total income is much higher, say over 2 crore.
Ah, okay. A specific cap for those types of gains.
Exactly. And second, under the new tax regime, the highest surcharge rate itself is capped. If your income goes above 2 crore, the maximum surcharge under the new regime is 25%, not 37%.
I see. So the new regime offers a lower maximum surcharge compared to the old one for very high incomes.
That's right. It's another factor in that regime choice calculation for high earners.
Okay. And what about the health and education cess?
That's simpler. It's a flat 4% added on top of the total amount of your income tax plus any surcharge that applies.
And that's for everyone, NRIs included.
Yes, everyone, all taxpayers, including NRIs, whatever their income level. It's just 4% on the final tax plus surcharge figure.
But not on rates from tax treaties.
Correct. Surcharge and cess generally don't apply to tax rates that are determined under a double taxation avoidance agreement or DTAA. Those treaty rates are usually final.
Good clarification. Okay, one last piece.
Yeah.
The rebate under Section 87A, we hear about this helping lower tax bills. Does it apply to NRIs?
No, that's a really important point. The rebate under Section 87A is only available for resident individuals. NRIs cannot claim it.
Okay, straight answer. No Section 87A rebate for NRIs. Just for context, what are the limits for residents who can claim it?
Sure. For the current year, FY 2025-26, under the new regime, residents with a net taxable income up to 12 lakh rupees can get the rebate, effectively making their tax zero.
12 lakh under the new regime now.
Wow.
And last year?
Last year, FY 24-25, the limit under the new regime for residents was 7 lakh rupees.
Okay.
And under the old regime, for both years, the income limit for the rebate for residents is 5 lakh rupees.
Right. And there might be some marginal relief complexities there, too, for residents. But the main point for our listeners
is that NRIs are not eligible for this Section 87A rebate at all.
Exactly. So summing up, we've covered the new rates, the old rates, the changes year-on-year, surcharge, cess. It's definitely a lot for an NRI to track.
It really is. Choosing between the old and new regimes isn't always straightforward. You have to look at your income sources, your potential deductions, the impact of surcharge, and remember that things like the 87A rebate just aren't on the table for NRIs.
Absolutely. Calculating the tax under both scenarios seems essential.
Definitely. It's the only way to be sure which is more beneficial for your specific circumstances.
And look, these tax laws are complex. If you're an NRI and feeling a bit overwhelmed or just want to make sure you're doing things correctly and choosing the best regime, getting professional advice is really sensible.
I agree. Personalized guidance is key.
And on that note, if you do need that kind of expert help, you could reach out to the folks at Tax Acceler. They specialize in this area, and they actually offer the first interaction for free.
That's a great resource, yes. Getting tailored advice ensures you're compliant and making the smartest tax decisions as an NRI.
So we'll leave you with this thought. As an NRI managing finances in India, what specific parts of your income or your investment strategy are going to be the deciding factors when you choose your tax regime for the coming year? Something to really think about for your planning.